Honestly, you know what I think about? I actually think about all the Bitcoin I sold.
Oof. Yeah,
I had Bitcoin. I
buy?
had a bunch of Bitcoin in my
Yeah.
funds when I managed outside capital. That's I don't know, a $3 or $4 billion mistake and growing now because my partners at the time capitulated and I wanted to be a good team member and we distributed and it was profitable. But obviously, I shouldn't have sold it. Would have made them a lot more money.
Billionaire investor and host of the All In podcast, Chamath, is confident that Bitcoin is in the midst of a bull market and says a big move is coming. Predicting a major surge, he believes that rising investor activity and decreasing Bitcoin balances on exchanges are signaling a shift towards a huge price movement. On top of his six-figure price prediction coming for Bitcoin, Chamath says that this massive opportunity is unlike anything he's seen before. After selling his Bitcoin position, which would be worth billions today, he says investors need to get on board immediately. After a 35% increase since November 5th, Bitcoin's path heading into 2025 is on full display. Bitcoin's price has been steadily climbing in 2024, up 44% year to date, currently sitting just above $97,400. The well-known billionaire investor remains bullish after major events such as the approval of the spot Bitcoin ETFs and the historic price movements following the Bitcoin halving. He believes Bitcoin is on the verge of a significant breakout, comparing the current $90,000 price range to Bitcoin's consolidation at $10,000 in 2020, right before a massive bull run. Chamath believes Bitcoin could hit $500,000 by October of 2025, especially after the recent price movements. Let's get right into the latest interview with the All In podcast, where Chamath gives his prediction for Bitcoin and where we're headed in the days and weeks ahead.
There will be a point, and it's probably in our lifetime, where it is an independent asset and a non-speculative store of value. The other thing I'll say just broadly about the market is I think that there's a tremendous amount of optimism about the economy. I think that's why you see risk spreads get crushed.
Definitely. Yeah.
And I think that as long as we see the kind of prognostications that the Trump administration is putting out, I think people are going to be mostly bullish. And then I think about I bought some land.
I remember
Lake Tahoe.
that. Yeah.
It was in the Wall Street Journal. I'm sure you can find it, but
Yeah.
how much is that worth now? Probably a couple $100 million, maybe more.
Rough trade. But you do have Bitcoin holdings,
Chamath,
so
can I
okay.
ask you a question? Why do you say sold Bitcoin as opposed to converted Bitcoin into dollars? Like when you think about Bitcoin, just as a participant, do you think about Bitcoin as a dollar-denominated asset that you go and buy Bitcoin and then you're eventually going to sell it, turn it back into dollars and use the dollars? Or are you what do you think about the purest kind of idea that Bitcoin should be the de facto currency and store of value in the future and the dollar doesn't matter, and we shouldn't necessarily be talking about the value of Bitcoin in dollar-denominated terms as something I'm going to eventually turn it back into?
It hasn't happened yet. And so until it happens, I think you have to view it as a very good gold proxy. But it's a largely dollar-denominated asset.
Now, why do you see it going the other way? So a lot of folks thought that as a safe haven, it should do well when there's a negative economic outlook, but it has traded the last couple of years kind of the opposite.
Totally correlated. No, it's a totally correlated asset. I mean,
yeah,
there will be a point, and it's probably in our lifetime, where it is an independent asset and a non-speculative store of value. There will be that day, but that day is not now. And I think it's very important to see the conditions on the field as they are versus what you wish it to be. And the reason is that it allows you to risk manage more appropriately. Because if you don't see it, then when something happens to the dollar complex, good or bad, or when something happens to rates, good or bad, or when something stimulative happens, good or bad, you're not going to react properly if you're in the business of managing it as a risk asset. So if you're in the set it and forget it bucket, and there are some people, I think it's great. None of these conversations matter. But like most people, you're probably going to be motivated to do something. And I think if you're motivated to do something, or you have FOMO that stimulates you to do something, whatever the psychology is that leads you to action, it's probably important to just view things as they really are versus how you wish them to be. And so I think the purists may eventually be right. I think they will be right at some point in my lifetime, but they're not right now. And that's why these things are correlated. And
If
you
the
should
market
act
goes up?
appropriately. I think the way that this trade turns around is when something actually breaks in terms of the inflation picture or in terms of the deficit picture. And if those things look like going into 2025, that President Trump's actions are not going to be able to course correct it, then I think you're going to see people go massively risk off, which I think will not be great for markets, obviously. But right now, we're not in that point.
The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Chamath asserts this journey is just beginning, comparing the initial years to the current widespread interest and investment, with a giant spotlight on Bitcoin ETFs. Chamath highlights this being a significant development in the financial ecosystem. The All In podcast discusses why crypto is completely being reshaped as one of the best opportunities in 2025.
Sax, your thoughts on crypto before we get into IPOs and M&A, if any?
Yeah, just on crypto, the House Republicans already passed a framework for crypto regulation earlier this year. It actually got 71 Democrats to join it. It was called the Financial Innovation and Technology for the 21st Century Act, or FIT 21. And it would classify digital assets like crypto as commodities regulated by the CFTC if the blockchain they run on is quote, functional and decentralized. That's the key requirement. If their blockchain is functional but not decentralized, then they would be considered securities and fall under the purview of the SEC. I think the crypto industry basically wants a really clear line for knowing when they're a commodity, and they want commodities to be governed like all other commodities by the CFTC. So that's what the Republican bill would do. I think with the Republicans now winning the Senate, the prospects for that bill to get enacted are now greatly improved, especially because Sherrod Brown, who used to run the banking committee, just lost to Bernie Moreno. This was a seat in Ohio. Elizabeth Warren is still going to object to this legislation, but she's just going to have way less influence. And like you said, it's not clear that Gary Gensler is going to be sticking around very long at the SEC. So look, the bottom line here is that I think that we are close to having clear rules of the road codified by Congress, which is what the crypto industry has been asking for. And the days of Gensler terrorizing crypto companies by issuing Wells notices without clarifying what the rules are that he's prosecuting, those days are about to be over. So I think this is why the crypto markets are rallying.
And I think, like you said, it's not limited to crypto. Crypto is one market of several that have been significantly affected by the outlook based on Trump's election. I think that Trump's election has a couple of key features that are changing market dynamics. One is folks kind of view some of his policies to be obviously stimulatory, with lower tax rates and more deregulation. This is, theoretically going to drive up investment and economic growth. The deregulatory nature on its own benefits markets that have been encumbered by regulatory oversight and regulatory challenges like crypto, finance, and fintech. So those types of businesses are clearly going to benefit or expected to benefit significantly by being able to launch products more quickly and have features and ways that they can generate revenue that they might be challenged to do under the current regulatory schemas. And then there's also this element of kind of things being inflationary, the feature of tariffs. If we don't get spending cut fast enough, there's an effect on markets. So, we're still seeing 10-year treasuries sit at about 4.5%, up from 3.5%, which is where we were right around the rate cut beginning in September. And remember, since those rate cuts began in September, we've cut 75 basis points. And we're still seeing the kind of 10-year treasury hold high, which kind of implies that there's expected to be persistent inflation. In fact, the October inflation number accelerated again. So it's back up, not going down. I think it went up to 2.6%, up from 2.3% the month prior. These general kind of effects that are predicted from the Trump policy plans is having an effect in different markets. Obviously, in equities, we're seeing more kind of risk-seeking, risk-taking. And then in the bond markets, because of the 4.5% treasury yield, there's a really interesting dynamic, and I kind of sent this link out yesterday. But if you look at the spread on yields between U.S. Treasuries, which have historically been kind of considered and talked about and are deemed the risk-free rate, and the yield that corporates have to pay to borrow money, we haven't seen a spread this low in 26 years. So it's a 17-year low for the spread between the yield that companies that issue junk bonds have to pay from treasuries, and it's a 26-year low for credit grade bonds. So this means the market is either more risk-seeking, meaning they're looking for more yield and they're going into corporates because they feel like there is a higher probability that these companies are going to be successful in the future. They're not going to have higher default rates, et cetera. So the market is becoming much more risk-seeking. Or the alternative is that parts of the market are reassessing the risk-free nature of treasuries themselves. If spending doesn't get under control, the treasury market appetite is decreasing. So there's this kind of spread that's shrunk in the last couple of months. So we're seeing capital flooding into the markets for risk-seeking assets. And this is obviously affecting crypto, equities, and bond markets all across the board.
The crypto market is poised for a meteoric surge in prices. He illustrates Bitcoin's current undervaluation, drawing in investors and enticing speculators eager to ride the waves of September's price fluctuations in pursuit of profits. Chamath's outlook is fueled by the impending wave of mass adoption, which he believes presents an unparalleled opportunity to get in on the action. He sees the race toward a six-figure price target. What's more, he highlights the intriguing historical pattern of Bitcoin's value surging 10x with each halving event, hinting that 2024 could catapult Bitcoin from $10,000 to an unbelievable $100,000. He asserts that the promises made by the Federal Reserve and central banks have been hollow, leading to excessive money printing and a proliferation of poor investments. And with the aftermath of the recent inflation surge, Chamath says this will not lead to a return to the status quo. He argues that the economy has spun out of control, with the US facing a mounting debt crisis. Kaiser presents two bleak possibilities: hyperinflation or a deflationary depression. In either scenario, the overall quality of life deteriorates. He notes the absence of viable solutions, indicating an even greater severity of the crisis. Interestingly, he points out how political figures are discussing Bitcoin as part of a potential solution, marking a shift towards a Bitcoin-centric financial framework. What do you think about Chamath's prediction for Bitcoin, the crypto market cap, as well as the institutional capital pouring into the space? Comment down below.